Welcome back, everyone. Once again, in this podcast, I have my co-presenter, Julie. How are you, Julie?
Fine, Seawing, how are you this morning?
Very good, very good. Yeah, it's fine. Thank you, Julie. So Julie is one of my real estate member within my community, within my network, one of several thousand members I have within my network that I've been been existing for the past several decades. So I've been there,
Yeah.
done that. So Julie, because I keep on inviting Julie because she have a great perspective. She putting herself in your shoes as a regular investor, whether a newbie or otherwise, to see how she take into this kind of content. So Julie herself have purchased a 6 property portfolio in upstate New York, and she's doing very well with her portfolio over the past several years since the housing pandemic. So yeah, so she can share her perspective in real time and in a spontaneous way as always. So she's representing you guys out there, mom and pop investors out there, small time investors out there who trying to achieve some level of financial freedom. So thank
Mhm.
you for sharing your thoughts and what have you. All right. So
Thank you.
yeah,
Mhm.
my pleasure, really. All right. So Julie, so just follow my my presentation as always. So today's topic is stress-free rentals. Wow, how cool is that?
I love the title.
Really, every day, as us Americans living in the US and everybody in the world,
Hmm.
there's so much stress out there. There's so
Yes.
much, so many challenges that we're facing, with
Hmm.
ourselves and our families. There's so much stress on a job, stress with investment, stress of maintaining your livelihood, whatever, stress with money. And so I'm going to try to prove a point that the kind of investment model that we're using, you can obtain stress-free as you buy rental properties. Okay,
Right.
so yeah, well, okay, let's get to the point. What I mean by stress-free rentals. All right, here it is. Manage your rentals in just 1 hour per month.
Yes.
If you use the right methodology, which is turnkey stress-free rentals that let you scale your real estate portfolio and buy back your time. It does not matter if you own one rental or in the next 10 to 15 years, if you own 100 rentals, you can achieve stress-free status as a landlord. And not only that, only spend 1 hour per month in quote unquote managing your real
Mhm.
estate portfolio. All right. So
Sounds good.
really, some people thinking this is too good to be true. Mr. Yi must be, try to overhype everything. Well, I'm not trying to overhype. Well, Julie, you are the person, an investor that have done our deals all these years.
Absolutely.
So what I'm telling, what I'm presenting, you tell me whether I'm being overhyped or
Oh
not.
no, what you're saying is very realistic. I mean, I don't have 100, but I do have six, and
Right.
it really does. It takes very little time. I mean, when you say 1 hour per month, that's really real. I mean, I really don't think about my rentals, with the property management that we have in place, and I know you'll get more into that, but yeah, I really don't spend any more than 1 hour a month
And not just,
managing properties.
yeah, Julie, not just you. Over the years, several hundred of our investors within our community have done similar things with you. They have
Hmm.
purchased
Yes.
5, 10, 15 rentals.
Right.
In one case, one of my investor also happened to be my Oklahoma turnkey provider, Mr. Richard Advani, right?
Hmm.
Richard
Yes.
Advani is my
Yes.
investment loan agent for my network all these years. Now he's the owner of a turnkey provider in the submarket of Oklahoma. And
Hmm.
Advani, my great friend, great investor, he owned, I think, 40 rental properties.
Wow.
At the time that he purchased those rental property in the past 15 years,
Hmm.
all he bought everything brand new construction,
Nice.
turnkey, entry level, brand new construction properties, cash flow with professional property management. He still has his portfolio across like 5 different markets in Buffalo, New York, in Central Florida. in
Hmm.
Oklahoma, in Texas, and in Alabama, uh, at least five.
Nice. Right.
So he's single family home cash flow portfolio spread out across five housing markets, around
Nice.
40 rentals, and recently I believe he purchased more than five commercial properties. So
Wow.
he's only about age 40, young man, which
Oh,
is
gotta love that.
very young, very still young man in our
Yes.
eyes. We're older than him, and
Hmm.
yet he spent 1 hour per month in managing his vast real estate portfolio.
Nice. Very nice.
I know he's an extreme example, okay,
Hmm. Hmm.
among the investors that have purchased through my network. Very extreme. He's the highest of highest level. But if
Right.
he can do it, he's not, he's not a genius. He's not a rocket scientist. He doesn't come with money. He
Right.
just work hard at his craft. He's focused. He's disciplined. He buy one rental at a time, any given time. He run a full-time business, a turnkey providing business. He sell all his turnkey Oklahoma properties to all the real estate network all over the country. So he's
Hmm.
focused in managing his full-time job as an entrepreneur.
Nice.
He's a passive investment.
Wow. I gotta love that. You can't beat that.
No.
Because who wants another job, right? You
Yeah,
know?
I mean, that's right. Look at me, right? All these years, people don't know. I mean, I've been traveling full time for the past 20 years.
Nice.
And I spend my network, this is my own company, my Year Real Estate Network, on a weekly basis for the past 20 years, ever since I started my consulting company, my
Hmm.
network, I spend like 10 hours per week. 10 hours, sometimes even 5 hours.
Right.
Lately, in the past couple of years, 2 or 3 hours per week,
Nice.
while my wife and I travel full time all over the world to 50
Hmm.
countries. And we've been to cruises, going to ships and cruises, some luxury cruises. And those luxury cruises, those super luxury cruises, they're not cheap, right?
They're not cheap. No, they're not.
It costs about $1,000 to $2,000 per day
Hmm.
to go to this super luxury uh,
Right.
cruising. That's what we love to do. We'll continue to do that. So my real estate portfolio allow me to have the time freedom to travel
Right.
all over the world and explore all those countries multiple times as we speak.
Right. Hmm.
That's about myself, okay? Let's continue with the PowerPoint. So you buy rental, and our rental property that we talk about is not 100% passive, okay? Well, okay, maybe 99% passive.
I'll take that.
But another terminology, Julie, that I like to use is financial freedom for the lazy person.
There you go. I love that.
Yes, that's right.
Hmm.
I got a lot of slideshows, so I want to go real quick, okay? And
Okay.
then when I ask for your thoughts, I'll give you
Sounds good.
I'll give you the signal. So typically, a person when every investor out there, you have to assess your personal situation, determine your buy box, if you will, your buy box. Most of
Hmm.
our investors have full-time job, W-2 income. A lot of our investors are located in the Silicon Valley Bay Area.
Hmm.
Many of them are engineers, nurses, doctors, and self-employed, highly compensated individuals. And but we have other investors spread across the other part of the country, and so they join my turnkey community, right? My network.
Hmm.
So yeah, so you have to ask yourself, what's your time availability, right? I mean,
Right.
each time you dedicate to invest in real estate. So what is your skill set? What's your comfort level? Are you an
Hmm.
entrepreneur or and hands-on, or you rather be a passive investor because you're so
Hmm.
busy with your full-time job, with your
Right.
family obligations and children, and all that, right?
Hmm.
So everybody's different, right? So at the end of the day, Julie, you have to decide whether you want to be an active real estate investor or a passive, totally passive, 100%, or semi-passive.
Right.
You and I, we love turnkey cash flow, buying out of state, buying
Hmm.
remotely single family
Absolutely.
homes to 4 units. We are pretty much in this category, you and I, right?
Right.
This is my core philosophy from the beginning when I started my business when I started real estate investing back in the early 2000, 2003 when I started. By the way, Julie, when I started in 2003, started buying rentals, at that time, virtually there was no internet, no Googling,
Right. That's true.
no
That's true.
chat
It was very
GPT.
minimal. Yeah.
It's like a dinosaur days.
Yes.
20 something years I've been investing.
Hmm.
The evolution of this world with technology, with access to tools and resources for risk investors is mind-boggling. Had I
Yes.
had I had all those tools and resources back then when I started more than 20 years ago, I would have done a lot better. I'm not complaining. I'm not complaining, but
Yes.
okay, I don't want to.
But I get it though. Yeah, you have much more access to resources these days, so it does make a difference.
Well, yeah. So if you become passive investor, but if you're passive investors buying REITs, right, real estate investment trust,
Mhm.
syndications, and all that, those, you lose control. The returns are not that high because you can't keep track of those
Mm,
syndicators, those fund, those real estate investment fund.
correct.
They could be hiding something good. They could be scams. They could be incompetent. They could be idiots. You don't know those fund managers, right? If you
Right.
if you you put your money into those passive investing, mutual funds or
Hmm.
risk investment trust syndications, I mean, there's no transparency. There's no accountability,
Right.
right?
Right. Hmm.
Those fund managers, those syndication
Hmm.
managers, they hide inside the fund, and you can't do any more research. How
Right.
can it's just a lot of people got hurt by those
I can
investments,
imagine. Yes.
and
Hmm.
because they lose control, right? You have to control your money. You have to control your real estate asset. So totally passive investor, I don't really like. I like semi-passive, which is what you and I do, turnkey cash
Hmm.
flow properties. Now, all the real estate gurus out there, Julie, if I watch other people's content, YouTube content, so there's YouTube influencers, the real estate gurus. Many of them are fake real estate gurus out there. You'd be
Right.
surprised
Right.
how many of them are fake. Social media, YouTube videos, TikTok, Instagram. They always preach, too good to be true schemes, get rich quick
Hmm.
scheme, and they want an investor, especially a newbie, to be an active investor. They want the exciting, fix and flip. Wow, so much opportunities, fix and flip, or get into a short-term rental, Airbnb or mid-term rental, where you can do a lot of work, a lot of, you can put a lot of, you have to spend a lot of time,
Hmm.
or you can do people promote, self-managed buy and hold rentals. People promote wholesaling or door knocking, or
Hmm.
make 1,000 offers, make ridiculous offers, spend
Right.
time on a multiple listing service or door knocking, or burst strategy, right? The burst strategy is very, very famous, especially with those mainstream YouTube content creators
Yes.
such as Bigger Pockets. Have you heard of
Yes.
biggerpockets.com?
Oh, absolutely. Yes. Hmm.
Yeah, they are the largest real estate investment marketplace in the country. They have like 1 million subscribers. Okay.
Right.
And they always promote BRRRR strategy. You buy,
Hmm.
you renovate, you refinance, you repeat. They focus on those Midwest markets, those old properties, built 100 years ago. So they
Right.
encourage their investors, or many of them are newbies, to buy. You buy the 50% discount, then you renovate with your own money. You
Hmm.
get the renovation, you spend the renovation cost, then you refinance, then you repeat the process. But in today's high interest rate environment, the BRRRR strategy, for the most part, does not work.
Right. I
So
agree with that.
it's
Hmm.
really overhyped. A lot of people got burnt in the past 2 years because they followed this stupid BRRRR strategy. Some people always going to be successful no matter what
Of
kind of
course.
strategy. But most people chasing this too good to be true schemes, this short-term get rich quick scheme, and this mesmerized by this very popular real estate gurus out there, fake gurus.
Right.
It's just very sad. What are your
It
thoughts?
is. No, I agree with you. I think that a lot of times they make it look like it's so much easier than what it really is until you really get into it, and then you realize, the upfront cost is a lot more, or it's what they say, but then the additional costs that go along with it are much more than you anticipated, and the time and the workload is much more than you anticipated too. So it can be very disappointing for the average person that doesn't really have an investment knowledge, they make it seem like it's super easy, like anybody can do it. And really, not everybody can do it.
That's right. That's right. A lot of people got burned. Of course, the people that get burned, they don't promote themselves in the testimonial videos.
Right. Yes.
They hide somewhere and nobody know what they got burned. So
Exactly.
for every successful testimonial videos that come out by Bigger Pockets or any other
Mhm.
YouTube videos out there, for every
Right.
success stories, there are 10 other people, 100 other people got scammed or got they crashed and burned, right? They lost money,
Yes.
all right?
That's right. Hmm.
All right, all
Very,
right.
very true. Very true.
Okay, yeah. At the end of the day, Julie, one have to evaluate their risk tolerance and what have you. So
Hmm.
high touch strategies, Airbnb, flipping, burst strategies, like we said, require time and carry much higher risk.
Hmm.
Many of these trendy reinvestment opportunities promoted online are hard to scale, right? Without trading time for money. Okay.
Yes. Hmm.
So
Very true.
the idea is to focus on one strategy, narrow down your buy box, if you will,
Hmm.
buy
Hmm.
box that fit your goals and risk tolerance rather than chasing every
Every
shiny
shiny object.
object.
Absolutely.
So,
Hmm.
yeah, one have to consider the time and the money trade-off, right? If your priority is freedom and minimal time involvement, so then perhaps turnkey investing, the things that I preach that you
Correct.
are involved in,
Hmm.
may be ideal for some people. So typical involvement can be an hour to 2 hours. How easy is that? So
Right.
furthermore, over time you can scale to dozens, even hundreds of turnkey casual properties without significantly increasing your time commitment.
Correct.
So the key takeaway is define your buy box, stick to it, decide whether you want to be an active involvement investor or passive investor or semi-passive, like our turnkey
Hmm.
cash flow properties that we promote over the past 20 years. You have to value your time and choose a strategy that aligns with your lifestyle goals. And turnkey investing, in my humble personal opinion, offers a way to achieve financial and time freedom while efficiently scaling your real estate portfolio. So, and our methodology that you are heavily involved with in your 6 rental properties and all my risk investors, they buy in different markets, which I will show you. We use this turnkey freedom formula. What does that mean? That means we use amazing property management. We, as an investor, Julie, I don't even call myself a landlord. I don't, you,
Right.
you are not a landlord.
Correct.
You happen to be a semi-passive investor that own a portfolio of real estate properties. 100% you and your husband owns,
Yes.
right? So you are
Absolutely.
an investor. You are
Hmm.
a stress-free
Yes.
investor.
Exactly.
Fo-
Exactly.
Focus on you and I. Focus on what's important to you. Spending quality times that are important to you on your daily life and
Yes.
and so you can free up time to do things important to you so you can delegate and outsource everything else to a
Hmm.
professional property
Absolutely.
manager. Am I right?
Right. Hence the word stress free. Right. Because it's really all about getting the right team in place to be able to create a less stressful life for you.
Julie, okay, if I may a little bit, I don't want to spend too much time because over the past few years you have disclosed your details of your real estate portfolio.
Right.
All I can say is your 6 rental property you bought in upstate New York through
Hmm.
our network.
Correct.
You bought it and the prices of your properties increased like 20 to 30%
Hmm.
since
At least.
at least since you bought it 4 or 5 years ago.
Hmm.
I know the
Hmm.
pandemic housing boom, all the houses
Right.
appreciated. We get
Right.
it, but your rent has also increased in
Yes.
aligning with inflation, and
Yes.
and inflation in the past few years has been elevated quite a
Hmm.
bit.
Right.
So, you know,
Absolutely.
rent rental rate increases in alignment with inflation. So your rent
Absolutely.
have increased. So you have higher cash flow now than a few years ago.
Yes. Yes. And I think that's the main thing. Again, going back to what you were saying about know your buy box. our buy box was cash flow. We really are working to supplement our retirement when my husband stops working. So yeah, and it is exciting to see that, wow, we are getting more than what we were getting when we first started this 5 years ago. Well, yeah, I guess 5 years ago, 4 years ago. Yeah,
Right.
4 years ago,
Yeah.
2021. Yeah.
Yeah, exactly. And you got some appreciation, equity growth as a
Hmm.
bonus, right?
Yes, absolutely. Absolutely.
And yet your capital expense, I know you bought much older properties in Buffalo,
Hmm.
New York. My other markets, we promote brand new construction, which is very, very
Yes.
different in terms of maintenance.
Right.
But even buying older, much older properties in upstate New York, your portfolio, your capital expenditures, your vacancies, and your maintenance is not that high. It's
It
not that
really
bad,
isn't.
right?
It really isn't. No, we haven't really had any major issues with any of our properties. So, yeah, I mean, like you said, it is an older home. They do have things that need to be fixed or whatever. But yeah, then again, we've had pretty consistent tenancy in most of our properties. So we haven't had a lot of people moving in and out. So that does make a difference. Yeah.
Good. Good to hear. Good to hear. Yeah, yeah. So yeah. Anyway, so the turnkey formula is using professional property
Mhm.
management. We don't need to deal with tenants and toilets and evictions. That's how
Exactly.
how stressful that is for people to self-manage
Hmm.
their rentals.
Hmm.
I really feel for them, right?
Hmm.
They doing it all wrong. Their buy box is all wrong. Their strategy
Right.
is all wrong. It's so sad. People today is still using the very bad investment methodology. So
Hmm.
what we do is we delegate and we outsource everything. Okay.
Hmm. Hmm.
So essentially, we spend just 1 hour, maybe 2 hours, in quote unquote managing our
Yeah,
rentals. So
that's very real.
furthermore, you know, all you gotta do is most people, Julie, is so simple. It's not rocket science to buy,
Mhm.
to create, to achieve financial freedom using real estate. All you gotta do is buy, especially for newbies,
Right.
just buy your first
Just get the
rental
first one.
property. Take that first plunge.
Exactly. Take the first step. I agree with that 100%. Because once you take the first step, the second one becomes easier. The fourth, the fifth, the sixth, the 10th, the 12th, whatever, it
Exactly.
becomes pretty easy.
Yeah, as a matter of fact, Julie, if one were to buy your first rental, of course, you come down with you come with your own down payment, 25% down payment, for example, right?
Hmm. Hmm.
Then if you buy in the right market, which I will show you guys momentarily, you know what it is, but my listeners out there, they need to know the kind of market that we're promoting. The
Right.
kind of market you buy is so critical for wealth
Hmm.
building, and I'll show you in the next few minutes for those listeners. But your first rental is you buy with your own money, with your own down payment.
Right.
Over time, you don't need to spend any more down payment. Why?
Right.
Because you 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 build equity as a renter's going to pay down your mortgage, your loan.
Hmm.
And then if your property increase in appreciation in the next 5 to 7% appreciation
Right.
in the next 3 to 5 years, when your loan to value is like 50%, right now you buy your property, first property, you put 25% down payment. So your LTV, your loan to value is 25%. Am I right so far?
Right.
Simple, right?
Correct. That sounds good. That makes sense. Hmm.
Just do the math. In the next
Right.
3, 4, 5 years, if any of your rental property increase 5 to 7, maybe even 10% if you're lucky,
Hmm.
annual appreciation, you can have 50% loan to value, and that's a trigger point. You can cash out refinance to buy more property
Right.
from the equity, from the existing equity, from your existing
Right.
rentals,
Absolutely. That
or
makes sense.
do a 1031 tax deferred exchange to scale into more property.
Hmm.
So you don't need to put any more down payment other than your initial purchases of your rentals.
That makes sense. That makes a lot of sense. Hmm.
Yes.
Hmm.
Yes. But if you buy in the wrong market, you're not going to get the 5 to 7
Right.
appreciation. You have to buy
Right.
in the right market, which I will share with the audience
Hmm.
momentarily, right?
Okay.
So here are the repeat and scale every 3 to 5 years. So here, if you got to buy in the right market. So the high
Hmm.
growth markets, you look for the fundamentals real estate, population growth, job and wage growth,
Hmm.
migration trends, new construction, high demand. You, I follow the builders all these years, the path of progress. You know,
Hmm.
for the past 20 years, 20 years ago, my group of investors, they follow me, new construction properties, entry level, 20 years ago, 15 years ago, 10 years ago, in Las Vegas, in Phoenix, Arizona,
Mm,
in Nashville, Tennessee, in Charlotte, North Carolina, in Orlando, Florida, in Tampa, Florida, in
mm,
Boise, Idaho. At that time, I followed the builders because the builders, this is the blueprint. What I'm about to say, most real estate guru, they're not teaching this kind of stuff. You know why?
right.
Most real estate fake gurus,
Mhm.
YouTube content creators out there, they only been investing for the past few years, ever since maybe the housing pandemic,
Right,
if they
right,
have
right.
any rentals at all.
Hmm.
How could they call themselves guru that they have just barely entered the real estate investing market 5, 6 years ago?
Right,
If you do
exactly.
a deep dive into their background or those famous real estate gurus out there, they have those YouTube content creators out there
Hmm.
that have a large subscriber database of people, right?
Hmm.
Views, everything else. They're not, their background is very shady. Okay.
Mm, right, right, right.
Few, if any of them, have invested for the past several decades that I have. Anyway,
Hmm. Hmm.
uh, I watch the YouTube contents on a daily basis. I see what's going on out there. Okay.
Right.
It's just a lot of misconception. Anyway, so I follow the builder, I follow path of progress, buy in the right market. So the ideal property, single family home, up to 4 units,
Hmm.
200 to 250K purchase price, rent 1850, typically 20 to
Hmm.
25% down payment, 30-year fixed rate mortgage. So right from the get-go, positive cash flow with minimal
Right.
maintenance. Okay. Then you let renters to pay your loan.
Hmm.
Renters can pay all your debt obligations, property management
Absolutely.
fees, maintenance, taxes, insurance, everything, the whole 9 yards. And at the end of the day, you still have positive cash flow. Doesn't have to be a
Yes.
lot. Look at all
Right.
your property you bought, Julie.
Yes.
You bought the property in Buffalo, Niagara Falls, in upstate New York, 4 years ago, whatever, for
Hmm.
let's say $70,000.
Hmm.
And the rent is like 850 or $900.
Hmm.
Just do the math, right? You put 20% down payment. After
Right.
all the debt obligation expenses, at the end of the day, monthly, you could have $200 or $300 monthly
Yep.
positive cash flow. So
Absolutely.
your renter is paying all your expenses for you.
Right. We get all the advantages. We get all the tax advantages. We get the benefits. We get the income, and the tenant is paying, and I mean, it just works. It's just such a, I mean, it seems like it's more complicated than it is, but it can be very simple when you just boil it down to the brass tacks.
That's right. Our renters making us rich. And
Yes, there you go. I like that. Keep it simple.
not only that, I mean, there are more renters now than ever before. We are
Yes.
becoming a renters nation because
Hmm.
the affordability is the all-time low.
Yes.
That's,
I believe that, especially in the state that we live in, it's
yeah, in
ridiculous.
California, right? Yeah, I mean, with the skyrocketing housing prices in past 5 years and the elevated mortgage rate, that price out a lot of people
It
out
does.
there from the American dream of home ownership. So
Right.
they have to relegate to renting. So
Hmm.
we provide a good turnkey house and we put us, you and I, are, as landlord, we provide a home, affordable home for the renters to
Right.
live in. You know,
Absolutely. Hmm.
everybody need a place to live.
That's right.
Everybody needs shelter. That's the most
Hmm.
basic human needs. And as landlord, we provide a good turnkey property,
Hmm.
well maintained for them to live in, for
Right.
renters to live in. And they'd be glad to live in our
Hmm. Hmm.
right? So
Right.
we're doing our part in a good way, right?
Right. Absolutely. Absolutely.
Okay, let's continue. Leverage appreciation, leverage equity over time. And so you grow your portfolio year one, 5, 10. You have to stay the course and
That's
use
the
the
key.
equity growth nice and steady. Okay, a boring investment strategy, believe it or not. So over time, you could increase your equity, cash out refinance, 1031. So you achieve time and financial freedom, long-term wealth, and passive income. So you can potentially potentially retire early or make your W-2 job optional down the road, 10-year time frame. Do you agree?
Right.
Around 10 years kind of give you that roadmap, at least
Hmm.
10 years. You're not going to get rich overnight. Am I right?
Right. No, I was going to say, I think that's the key. I think some people get into this business and it doesn't work for them in 6 months, or they're not seeing the results, or they had a tenant leave, or and then it's like, oh, it doesn't work. But it's like this is a long-term strategy. And I think if people could look at this like they look at their jobs, people expect to be on a job, well, at least people in our generation, and be on their job for a number of years, and in that time you're building your 401k or your assets or whatever. This is the same thing. You can't just get in. I mean, nobody gets in a job and thinks they're gonna get wealthy in 6 months. So this is the same type of thing. You have to understand it's a long-term process in order for you to see the fruit that you're looking for.
That's right. The first few years, Julie, is a lot of frustration, a little bit of stress. Even with buying turnkey properties that we've been talking about, it's
Hmm.
still not that easy. You have to
Right.
overcome the negativity, vacancy.
Yes,
Your
absolutely.
mindset got to be positive. You have to continue to build up your skill set. Don't give up just because you may suffer a vacancy of 2 or 3 months, or maybe there's more eviction than you
Hmm.
anticipated. You got to solve the problem, stay the course, don't give up, and
Yes.
invest. Stay. Just don't give up. That's all there is to it, right?
Right.
Yep. Let me see what else. So the key takeaway is buy new constructions in growth market, use property management, let the renters pay down your loan and everything
Mhm.
else, recycle your equity. You don't need to use your own down payment anymore if you buy in the
Right.
private market. Adjust your initial down payment for your first rental or two.
Hmm.
Stay consistent, invest for the long term. Of course, my company, we can consult with people out there who want to contact us. So here's some of the property I'm going to do real quick. Okay, we only have 5 minutes left. So the
Hmm.
market that we love in 2025 and beyond, and
Hmm.
Julie, you're very much aware of my
Hmm.
investment methodology. The five market, we have teams available. We have teams in each of those markets that vetted their local market. They have done most of the work for you as a turnkey investor,
Hmm.
mom and pop investors. So we have a referral network, if you will, in North and South Texas, Central Florida, Alabama, Oklahoma, and Buffalo,
Hmm.
New York. And these are we get in the front, we get in early. We look at this, this methodology, methodology. Okay, I'm not going to spend much time on it. You can pause the screenshot on your own once you watch the video again. So this is
Hmm.
our fundamentals of how we identify those growth markets, if you will. All
Right.
these great metrics to use. Once we find a boom market, beginning of the
Hmm.
boom housing, I don't want to say the word boom. What does that mean?
Right.
But you just get in early, right? I mean,
Exactly.
you buy in A-class properties, good, fundamentals, lowest
Hmm.
entry level point, so you can cash flow, uh, and basically you buy. We have investors from California, investors from different part of the
Hmm.
country. And you guys are buying from long distance. You guys can buy remote, buy turnkey, new construction, cash flow rentals.
Right.
And of course, we have this kind of builder incentive. This builder incentive is going to go away, especially, Julie, when the mortgage rate falls to 6% or below.
Right.
When the mortgage rate falls 6% below, you know what's going to happen. What's going to happen?
Everybody's going to want to get in. And then the builders, well, the sellers will have the advantage. It'll be a seller's market. And so they don't have to negotiate with the buyers as much as they would have to if the rates were higher. So, yeah.
So
Hmm.
therefore, smart investors get in now before the
Yeah,
competition
absolutely.
uh, come.
Absolutely. Don't run with the herd.
That's right.
Run against the herd.
We are contrarian investors.
Absolutely.
Don't follow the herd, the blind leading the blind, right?
Absolutely.
Yeah, so all these builder incentives, and here's a various. I go real
Hmm.
quick, okay? I mean, I'll talk about this quite a bit. North Texas is my number one market. This is the metric. This is the pro forma, brand new single family home and amazing duplexes, great cash
Nice.
flow. That's North Texas is my personally, my number one market is an emerging housing boomtown in North Texas. We have 18 boomtowns that we are promoting off-market
Hmm.
investment houses. In Oklahoma, Richard Avani is the amazing Richard Avani. I know him for over the years, and he's in charge. He's the owner of this turnkey product in all the submarkets in Oklahoma. Julie, his company is doing so well. He's selling these turnkey new construction homes all over the Oklahoma submarkets. He's
Very
selling
nice.
hotcakes. He's amazing. As a young man, Richard Avani, not only he owned 40 rentals, he's continued to buy more. So if he can spend 1 to 2 hours
Right.
managing his portfolio, any one of us can do it. So
Absolutely.
Richie
Absolutely.
Ebany, he's a high level. I
Mhm.
get it, but he providing blueprint that turnkey remote cash flow new construction properties in a growth markets really works.
Right. Yes. Yes. He is definitely evidence of that.
Yep,
Hmm.
that's right. See, look at this property he has in
Nice.
Alton, Oklahoma, $156,000, new construction.
Nice.
Good rents very well, rents good cash flow, the whole 9 yards. Look at this. Where else can you find new construction for only
Mhm.
$156,000 anywhere in the country? And and it's a
Nice.
growing rental market, growing submarket in these boom towns in Oklahoma, in Lawton. He got duplexes for only
Very
320.
nice.
You
Very
put
nice.
25% down payment, you cash flow like $600. I mean,
Hmm.
amazing. Of course, South Texas, we have the fourplex that we've been promoting.
Nice.
Brand new full text, in South Texas for 549K, good rent, good cash flow. I mean, just it's amazing. And of course, Huntsville,
Hmm.
ex-military as I am, I know all about this Space Force.
Hmm.
The Space Force is another military branch. It was just created. It's a
Hmm.
Star Wars kind of deal. You have U.S. Army, Marine, Navy, and Coast Guard. Yeah,
Right.
and this is a military branch. Now you have Space Force.
Nice. Hmm.
And Huntsville, Alabama, is they could move the headquarters, the government and the military, the U.S. Space Command is moving to Huntsville, Alabama. So that
Nice.
creates some amazing economic
Hmm.
impact. So we have property there as well. This is a resale home uh, from past off-market listings in Huntsville, 229K, cash flow 25% down payment. And
Hmm.
other part of the Alabama, you know about Spartan Invest,
Hmm. Yes.
have turnkey properties all over Alabama, not just Huntsville. They have Birmingham, Tuscaloosa, suburbs, that is,
Okay.
and good new construction, 290K. It rents for whatever, 2,100. They have builder incentives. You can cash flow with 25% down payment. So yeah, Alabama is a fast-growing sub-market as well. See, like the mid
Nice.
200K brand new homes in Huntsville and surrounding Birmingham and Tuscaloosa, and Central and Southwest and Northwest Florida
Hmm.
bounce back boomtown,
Nice.
still doing well, if you buy in the right location, Florida or getting, there's a lot of negativity around Florida, but we
Hmm.
buy in good locations. We buy in inland, not subject to hurricane, not subject
Right.
to flooding, nothing like that. We buy new construction that are hurricane resilient.
Hmm.
Insurance coverages are very reasonable, and we got builder incentives all over uh, the strategic areas of Florida. Still, Florida can do well for the long term. They're going through a little bit of correction, but we don't buy. Most of the negativity around Florida is all in the coastal areas, right? And in
Hmm.
condos. We don't do condos. We don't
Right.
buy coastal areas of Florida, right? Uh,
Right.
all those negative
Exactly.
information. We buy in a good inland area or not
Hmm.
subject to weather conditions and
Right.
people people from all of Florida, people from other part of the country, or when they move to Florida, they could move to the inland area, away from the coastal area, into central Florida and northeast Florida.
Hmm. Hmm.
So great building incentives in Florida, even great cash flow, and they have some discounted property, great buyers market, a lot of amazing deals. We have single family homes, Okay, we have duplex for 379K, 400K. We have fourplex brand new construction in Jacksonville area for
Very nice.
850K, whatever. But it's all cash
Mhm,
flow, great builder
mhm.
incentive. Of course, Buffalo, Niagara Falls, which you have a nice portfolio with there.
Yes.
Uh,
Hmm.
the property have increased in value over the past
They
few
have.
years, but the rent has also increased. But the cash flow is not as good as before, but
Hmm.
that's the way it is. But still a good market. We have single family home for 75K,
Right.
duplex for like 100K or thereabout. Cash flow nicely, turnkey, rent ready, all rehab, older homes. But you alluded to yourself. This is your portfolio here, and
Yes.
we have fourplex of 150 to 200K, turnkey, rent ready, renters already in place,
Nice.
all rehab. So great property management on the ground, single family home, duplex, triplex, fourplex. Not that many listings anymore because the market has been very competitive. So
Sure.
all right, that's enough. Okay, that's enough for today. It's so overwhelming. Here's the recap, Julie. The recap is uh, uh, you don't want any more stress. Don't follow all the popular investment opportunities you hear, with the YouTube
Right.
content creators, with the social media, all those fake gurus out there that try to entice you to buy those get rich quick scheme investment
Right.
programs out there. The bird strategy. I'm not saying people will always could be successful. There's a handful of people could be successful doing short-term rentals. There's a
Correct.
handful of people doing well with midterm rentals. People can do well with syndications. People will do well in fix and flip. Uh,
Hmm.
these
Absolutely.
these type of shiny objects are really overhyped, in my opinion.
Hmm. I agree with that.
And they talk a good game. They get promoted quite a bit. These
Yes.
active investment. If you want to trade time for dollar, right?
Mhm.
Give it a try. But there's a very this kind of investing is very risky. So
It is very risky.
understand what you're getting yourself into. But if you use our methodology, if you find the right team, if you find the
Yes.
right network, you can do the turnkey, remote investing approach
Hmm.
with your own 5, 10, or 15, 20 rental properties.
Right.
You spend only 1 to 2 hours per month.
Right.
That is a key to stress-free rental. We don't
I
need any
agree.
more
I
stress.
agree. Going back to your original title, stress free.
Yeah.
I think all those other things, as you said, they can work, but they create a high level of stress.
Mhm.
You're trying to do a burst strategy or house hacking or all this other stuff, short-term rentals even. I mean, that's very hands-on. And it's like you have to, it's like another full-time job, really.
Yep.
It's really
Yep.
like another full-time job. And who wants to have another stressful full-time job?
Exactly. So again, I know we are we're tooting our own horns, but again, you know, everybody have their own unique,
Hmm.
skill set, unique personality, unique goals and objectives. I mean, your own, buy box, whatever. But
Hmm.
you know, you know, I'm tooting my own horn. Yes, I'm using. So anyway,
Hmm.
but I believe in what I'm doing all these years, and we have successful investors like yourself.
Right,
That's a proof that our turnkey model works for many years, uh,
right.
20, 30 years. Our turnkey model works, and it works now. So I wouldn't change
Hmm.
anything. All right. So, all right, Julie, thank you so much for your
Thank you.
for
Thank you
your.
for giving me this opportunity to share.
My
Hmm.
pleasure. Thank you so much. I'll see you guys next time. See you in a few weeks. Thank you so much, Julie. Everyone. Thank
Bye-bye.
you. Bye.
Mhm.